Okay. Guess we better get going here, folks. There's a lot to chat about. Um, Hopefully, Anas will join us at some point. Talk to us about uh, the move in oil, the announcement by the United States in terms of, and other countries to try to suppress the rise in oil and gasoline in particular. So let's go ahead and start with some other stuff. We'll wait for some of the other speakers to jump up on stage and join us this morning. But let's go ahead and start with some other company related news. So in the automobile sector, Tesla caused a major brouhaha when it decided to go ahead and sell automobiles directly to consumers. The dealership um, union, let's call it, for lack of a better term, was very upset about that. In the United States, there are regulations regarding industry standards as well, regarding sales of automobiles not being direct to consumers. Tesla went ahead and turned that on its head. Well, Volkswagen is reintroducing um, an old brand by the name of Scout. It's going to be some sort of SUV like, excuse me, Jeep, Ford Bronco looking type of vehicle, and they are now proposing to go ahead and sell that directly to consumers. Look, at the end of the day, many industries have been upended in terms of brokerage models, and the automobile industry is no different. And, I'm not in the auto industry, so I don't particularly have much sympathy for auto dealerships, um, especially in the age that we have now of, true transparency on pricing, and also in terms of being able to view the vehicle and pretty easily. And really, all dealerships are there for is really for servicing more than anything. Education on a vehicle is very easy to get online. You can even get a live person to chat with you if you have questions about um, features and amenities. And so, um, you know, it doesn't seem illogical to go that route. But that being said, Volkswagen is one of the largest distributors of automobiles, foreign distributors of vehicles inside the United States. Volkswagen has enough problems abroad in dealing with bureaucracy, things like labor in particular, all over Western Europe. And the fact that they're trying to go ahead and do this in the United States is not a shocker. Whether they go ahead and back off of this, but this was kind of the shot across the bow to let the dealership world know that, they're not going to be as forgiving when it comes to giving dealers on the no risk, only upside proposition that they hold. It is an important move, I think. The fact that someone other than Tesla is doing this now, an old line automobile manufacturer, to me, is a very important point in time. Um, we'll see, how quickly the dealerships not only respond, but also maybe try to offer some sort of compromise, maybe, because this is untenable at this point. It really is one of the last remaining lines of business where you have to have a broker in between. Manufacturer cannot sell directly to consumers. Carlo, just as a lawyer, just asking if you have anything to add on that matter. Good morning.
Good morning.
I think it's. Oh, David, can you hear me?
I can hear you. Yeah.
For some reason, and again, thank you, Elon. The setup music for Spaces is playing in my earbud as I'm talking to you. So
Oh,
let me see
we
if
can
I
hear
can
you
resolve
okay though.
that. Okay. So I think it's obviously a pattern that begs to be revisited, which is the dealership model is kind of broken. I'm a I'm a Tesla owner and I believe in Tesla's model, and the direct to consumer model cuts out a lot of fat, and it certainly cuts out a lot of bloat in the system and in the delivery process for vehicles. So I remember when I got my first Tesla, how controversial that you could direct to consumer buy a car, and it felt like buying an iPhone, and that's kind of the way it should feel. And I think it's probably a wake up call that we're about to see major disruption of another sector because, frankly, the sales floor and all the bloat that comes with the process of buying a car is largely unnecessary. My experience in buying my latest Tesla at a standalone dealership, which ironically used to be another major automaker's dealership location, kind of confirm that because there wasn't very much interaction between me and the quote salesperson. It was really just helping me get through the app and finalize my deposit and pickup location for the car. Um, the, the processing of the loan was done through the app. It was very straightforward.
Excellent. Look, I think that we have in every other line of business we've crossed this Rubicon. It is high time for automobiles. But again, I'm not a dealership owner, so I don't have sympathy for it. Nathan, good morning. Welcome. Anything to add?
Not to that. I just wanted to make a correction about one of my previous. I came to my attention that apparently part of this issue had to do with the Maduro raid, and that's what kind of turned Anthropic, I guess, against the government, you could say. And I would say that, in that regard, I don't think that that violated their terms of service and is not related to the two things that they said no to. However, I do still agree with the two things that they said no to. So I just wanted to clear that up and make sure that everybody understood that.
We appreciate your forthrightness, and we'll come back to AI related stuff in a little bit. I just wanted to get to one other thing before I get to Oracle, OpenAI, and then we can open it up a little bit wider. But Berkshire Hathaway, Greg Abel, right? So first quarter reported last week was not a particularly good quarter, particularly because of the insurance business. But nevertheless, had to the transition is now fully made. The one thing that I failed to mention when we spoke about it last week, the one thing that did change, which has been, the I don't know, the signature, let's say, of the very end of Warren Buffett's tenure at Berkshire, was the fact that there were no buybacks going on, and Greg Abel has reinitiated buying back Berkshire stock. First time since 2004 that we have buybacks. What that generally indicates is that Berkshire stock is trading low. Well, in the face of the sell off that we've seen in stocks over the last week or so, 2 weeks, um, you know, maybe was a good move, maybe wasn't a good move. The consumer staples that exist in that portfolio, particularly Coca Cola. Certainly, I guess justification of doing pretty well in this environment, but lots of other stuff, certainly tech related stuff, maybe not so much. And I think it's important for us to keep in mind that we've now moved beyond the Warren Buffett era of Berkshire Hathaway, and Greg Abel is going to be under a microscope, no doubt, at least for the first couple of quarters, to see if he is up to the task. And, having gone ahead and reinstituted buybacks at a particularly volatile time for the market, not that he knew this, but particularly volatile time for the market and volatile generally to the downside. May not have been the greatest of decisions. We'll see how that all turns out for him in the next quarter. But I just wanted to go ahead and bring that to folks' attention because that has been really the first big move that Greg Abel has made in the wake of Warren leaving. And certainly the market is going to go ahead and scrutinize him for that. Wanted to get to the news about Oracle and OpenAI. So we got this late last week that Oracle and OpenAI have ended their plans to expand their flagship data center in Texas. Now, mind you, we have this week, tomorrow, Oracle earnings. In addition, we also, or I mentioned, but we spoke a little bit about that SoftBank is borrowing $40 billion, trying to find $40 billion of money to borrow. Four banks they are working with, inclusive of JP Morgan, for that $40 billion to fund SoftBank's pledged investment in OpenAI. So this is perilous to say the least, in terms of, is there enough liquidity? Is there not enough liquidity? Oh, and by the way, OpenAI, the head of robotics, left a very public departure, left over the weekend, quit in response to the deal with the Pentagon, which Caitlin Kalinowski is her name. She doesn't like the deal that they've made with the Pentagon. She feels that what she's worked on, I'm paraphrasing her, of course, what she's worked on is too dangerous, I guess, to be in the hands of the government without any guardrails. So she is quite unhappy. She's out. And so OpenAI, A, needs a lot of money. B, scaling back projects with Oracle, whether it be for its own reasons or for Oracle's reasons. And C, losing some key employee. In the Oracle sphere, just to go ahead and round out the table here, like I said, tomorrow is when they're going to report their quarter for the period through the end of February. The expectation is that folks are, or analysts are, targeting a 20% jump in quarterly revenue. That would be good. It would be an acceleration from the 13% growth for the first half of its fiscal year. However, just so we understand where the market's at on Oracle, the markets or the analysts are expecting for the company to get to 48% growth year over year by fiscal 2028. That's when the AI cloud business is supposed to take off. So there is a lot baked in here in terms of expectations about the company. Oh, and by the way, the company certainly can afford, and this we may get, by the way, is an announcement regarding layoffs at Oracle. Oracle happens to be a particularly bloated company when it comes, if you go ahead and match the number of employees versus the revenue versus the folks that Oracle is now trying to go ahead and put itself in the same category as, in terms of software development or AI support. They definitely have a much larger workforce than many of their peers that are in the same space. So we may get some serious layoff announcements out of them. So in any event, so Nathan, to go back to you, your point about Anthropic, well taken, and thank you for the correction. We appreciate that. Your thoughts about what's going on at OpenAI. I know we've thrown shade on OpenAI, a couple times. Do you think this weekend's news regarding the resignation, regarding the lack of expansion with Oracle down in Texas, and then the contingency of SoftBank having to raise money to go ahead and make good on its pledge of $40 billion to invest, do you think that that leads to a particularly high risk quotient for OpenAI?
Yeah, I mean, I think the whole market as a whole is in high risk right now, especially with like the layoffs that are happening around AI. I've seen Amazon also just laid off a bunch of their Prime Video department recently, and if this continues, my question is going to be, how are these companies going to even have customers? Because it seems like the layoffs are happening faster than people are finding jobs to keep things going.
Yeah, in terms of, I saw if I can find it, I'll post it. I saw a bar chart this weekend that was very interesting about the number of tasks or the percentage of tasks that AI can go ahead and overtake for certain lines of work versus other lines of work. I'm sure, as you all can imagine, mechanics and HVAC folk are pretty well protected. And as we've spoken about here, the folks in financial services, legal services, management consulting services, accounting and audit services, all those folks are, at least according purely to the bar chart, are in big trouble in terms of being able to be supplanted. And yeah, to go back on your point about jobs and software generally. So look, we're definitely not out of this SaaS apocalypse that is going on. So the market went ahead and took another victim of this SaaS apocalypse. Essentially, I'm sorry, I should say differently. The follow on from the SaaS apocalypse is private credit, which has a lot of debt outstanding to the software industry, and surprise, surprise, BlackRock has a product, ticker HLEND, HLEND, that it had to go ahead and gate. They've had to. It's one of its biggest private credit funds. It was part of an acquisition that BlackRock did not home grow the majority of their private credit business. They bought a company called HPS, which has about $26 billion of assets under management now. And the redemption requests hit 9.3%, and management decided to cap the purchases at 5%. Again, so this is reminiscent or exactly the same, let's call it, as the Blue Owl situation. And, at this point, people are just rushing. I don't know if they're rushing today. Again, these redemption requests need to come in with considerable advance notice. But you can assume that, panic begets panic begets panic. And so I just want my money. Like, just just give me my cash. We'll worry later about the rest of it, about the return or about the loss. I don't want to be that guy that's there when they say, hey, by the way, there's nothing left for you. You didn't redeem early enough. You're at zero, my friend. So right now there's a rush for the exits, and these asset managers are left um, in the business. They call it saving investors from themselves, right? Because if BlackRock's if BlackRock would simply let 9.3% go ahead and be redeemed, that means that they would have to sell some pretty illiquid assets at some pretty distressed prices, which would then go ahead and continue potentially a daisy chain, right? You can imagine, Nathan, I'll get to your hand in a second. Let me just illustrate the point for a second, right? Folks think they're going to get back par, 100 cents on the dollar. Let's say, forget about whatever interest they thought they were going to get. At least just give me my money back that I invested. Well, BlackRock can go ahead and manage that. They're pretty good at that when it comes to pretty low redemptions. They have a certain amount of cash on hand always. They probably have a bunch of stuff that they consider to be pretty liquid, and they can go ahead and sell a bunch of assets in the fund, enough to go ahead and meet, let's say, up to 5% of the redemptions. But if you double that, let's call the 9.3 really 10. If you double that, that means they're going to have to sell some assets that they didn't think they were going to have to sell, and they probably have to sell those assets on a pretty rushed basis in a market that sucks, in a market that's frightened, in a market that's anything that's labeled with private credit is generally toxic. So they'll have to go ahead and sell those additional or the double amount of assets for a haircut. Let's make the haircut easy for math purposes. Let's say they have to sell it for 70 cents on the dollar. Let's say, let's just do straight math. It's not the way it works, but let's just do straight math, right? The redeeming folks are effectively going to get, let's say they sell 50% at 100 cents on the dollar, and they sell, the other 5% at 70 cents on the dollar. Effectively, the redemption is going to be somewhere at the midway point, right? Let's figure 85 cents on the dollar. Now, if I'm the other 90% of assets in the fund, I'm saying to myself, holy cow, I thought I had 100 cent on the dollar obligation, and you may very well, if all the other debt works itself out and they don't need to sell it. But the concern is that these guys just got out. They were the first ones out, and they only got out at 85 cents on the dollar. I better go ahead and put my redemption in now, because who knows how low that's going to get. And so instead of 10% for this period, the next redemption period could be 20% of assets. Who knows? And so it becomes really a race to the bottom in terms of redeemers, because your fears are preying on you. And yes, the market is cold, and you have an illiquid asset or assets underlying the obligations here. And so it can be very bad very fast. Plus, I'm sorry, one last point. Plus, everybody else that owns a piece of this fund is going to have to mark their positions appropriately, regardless of whether they get their money out or not. So if the first tranche of folks only gets 85 cents on the dollar, you have an obligation. You have an obligation to go ahead and mark your position down to 85 cents, because that's where people are getting their money out. So you have to recognize a 15% loss, even though you didn't get your money out. So therefore, you can imagine this is just a bad situation that could potentially get even worse. So BlackRock is doing what it can in order to save investors from themselves. Whether in fact BlackRock is smarter than its investors, or the investors are smarter than BlackRock, we'll leave that for another day. That can only be done in 2020 hindsight. Nathan, go ahead.
Yeah, you actually reminded me of a saying that I always have. When things get bad enough, everything is for sale. And the first things to go are liquid assets. And I think that's part of the reason why we've seen the drop in crypto, and particularly Bitcoin. And I think we've never seen a real downside in the regular stock market with Bitcoin. And I'm saying this as somebody who got into Bitcoin in 2013. But I got out in 2017 and really have never gotten in again since. But that's for other reasons. But yeah, I don't know what that's going to happen, or what's going to happen to the crypto market if we do face a very serious downturn.
Okay. On that point, I will definitely forget the Bitcoin part for a second. I will definitely reiterate your point about liquidity. You get liquidity from where you can. And so therefore, the things that are most liquid, and hedge fund managers know this very well, because they will say to their investors, hey, why are you taking money away from me? I'm at least, even if I'm down, I'm only down a couple of points. You have no idea how much money you've lost, investor, with your private equity and venture capital stuff that may be zero right now. The investor doesn't care. The investor is going to take money, A, like you said, from where it's most liquid, and unfortunately, B, they usually take from their winners in order to continue to pray hard and keep hope alive for their losers. Right? That's just general investor psychology. Folks that don't involve the human element in their investing certainly don't need to deal with this. But in terms of most LPs, that's the way they roll. And look, they may be right, right? In other words, to this point of the BlackRock fund of HLEND, yeah, maybe it comes back. Maybe the underlying loans are money good. It's going to take time to find out if they're money good or not, right? There's no maturity tomorrow on these loans that they've made. It's going to take a couple years. And yes, the market may come back. On the other hand, the bottom line is you can't get your cash out of it as easily as you want. And people need cash. I don't care who you are. You need cash. If you're an individual investor, you may need cash for your own daily spending. But even if you're an institutional investor, if a bunch of your capital is locked up in multi-year funds or vehicles, and you need money to fund ongoing operations, whatever it may be, research, it may be grants that you have to go ahead and give, it may be tuition assistance in the case of an endowment, whatever it may be, pension money to fund pension obligations. At the end of the day, you need liquidity. You don't certainly want to get to a point where you don't have liquidity. And so usually folks are building liquidity at a time when liquidity is least available, right? If the market is going up and everything is rah, 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 the psychology is I don't need liquidity. As a matter of fact, if I don't put all my money to work, if I am not 100% invested, I'm not maximizing my returns on the way up. And so I look like an idiot because my peers are going to go ahead and maximize their returns, and I'm going to pale in comparison in terms of my overall return profile. So at that point, while the market's going up, which is when you should be building liquidity, you're not. And then all of a sudden, the market starts to turn, things become illiquid, then fear goes ahead and rages, and people start to ask the question, hey, forget about this month or this quarter. Who knows when the market's going to unfreeze? If this war goes on for 6 months, this may be 2, 3, 4 quarters without proper liquidity in the marketplace. I'd better go ahead and get liquidity now for that period of time because I don't know if I'm going to be able to access the market. It may get frozen even harder over that period of time. So that's just the way things go. And yes, 100%. I can't emphasize it enough. You're absolutely right when it comes to that. Some other news over the weekend, Saks Fifth Avenue in their bankruptcy is closing 18 more stores, 15 flagship Saks Fifth Avenue stores, and 3 Neiman Marcus stores. This is serious, guys. Saks Fifth Avenue is going to be a shadow of what it once was. I mean, it's really going to be down to just like 10 or 20 stores around the country. I mean, they shut the first cut on upon the bankruptcy filing was kind of a no-brainer. This 18 that they're cutting now is real, and the reason that it's important is because vendors, suppliers are no longer going to have the behemoth that was Saks Fifth Avenue and Neiman Marcus to sell their inventory to. We're going to see some pain in the luxury sector. Forget about the economy overall and the luxury consumer, leave that aside. It takes a while for the chain of distribution to adjust. So if I don't know, Louis Vuitton, and I was used to selling 20 to 30% of my merchandise through Saks Fifth Avenue in the United States, and now, Saks Fifth Avenue has gone and downsized by 66%. My consumers are going to have to buy their Louis Vuitton stuff through other channels, either through my stores or through another store. And that shift takes some time to go ahead and happen, regardless of what's going on in the overall market. And so I think there's going to be some disruption. The large luxury guys are going to go through some difficulty, at least for a quarter or two. Not that it won't adjust at some point, but at least for a quarter or two, it's going to be a bit difficult. By the way, in terms of upcoming data, other than Oracle earnings tomorrow, we also have Kohl's. Not that people care much. I do, just because it's garbagey type of retailer. Wednesday is a big day. Wednesday is February CPI. Oh, and we have Campbell's Soup for all the people that are following the soup trade. Um, and then on Friday we have PCE for January as well. We have Dollar General and Dick's and Ulta Beauty coming out on Thursday. So we'll keep you posted on all those things. The the concern, I don't know how many people were watching the markets yesterday. We're watching futures. We're watching Korea and Japan overnight. Look, everything came back from its worst levels, but it's not like things came back in a roaring way or even cut the losses in half. Generally, I won't speak for particular assets, but the Nikkei off 5, South Korea Kospi off 6. I mean, at its lows, it was off over 8. And that's on top of last week's losses where the Kospi in Korea lost more than 10%. So, with regard to what Dave Levinson has been saying about international markets, international currencies, EM, so on and so forth, so far, he's been right. The real question is, when we get out of this war, whether we get out of it because of some sort of taco or we get out of it some other way, how fast is the slingshot back? I don't know the answer to that. And I'm sure, again, I will pray for Honest to come on. Maybe he'll feel my emotions. But it becomes harder and harder in terms of the oil market. Certainly, it becomes harder and harder to turn on those spigots when they're shut off for a longer period of time. Dave Nicoski, good morning. Are you back home or are you still away on vacation?
I'm back home.
Welcome home, sir.
Thank you.
How is it how's your weather, by the way, now in Minnesota?
When I got home last night, it was just about 50 degrees.
Beautiful. Yeah,
We literally don't have snow on the ground. I'm 2.5 hours north of Minneapolis, so it's
amazing.
very little snow. Let me say that.
Yeah, we hit 70 degrees here on the Jersey Shore yesterday, and it's supposed to be a pretty warm week. So maybe winter's over. So you picked a great week to be out of the office and be net short. Everything did good for you. What are you looking at this week?
Well, I still, I see overnight they're going to, globally they're going to, release oil from the SPRs. I mean, that's a temporary solution to a permanent problem, and how permanent that problem is no one knows. Um, I'm still in the camp that I'd rather own commodities. Financials are breaking down. I threw up charts, several months ago. Commodities are clearly leading as my uh, compatriot. I don't know him personally, but Walter Deemer, has indicated on his post. Financials are typically at the end of a cycle. Or I should say, oil commodities are at the end of a cycle, and if financials are underperforming, and I've clearly stated that too many times to count. XLF is near 5-year relative strength lows. If you held them for 5 years, you're way underperforming. You have charts like Goldman Sachs, J.P. Morgan, the IAI broker index. Jeffries looks like heck. I don't try to bottom fish things unless they're coming to a formidable support area, and I just don't see it on those. Those are breaking, multi-year uptrends across the board. I'm not a buyer of something breaking. Bitcoin broke its 3-year uptrend at 120,000. To give you an idea, where is it now? And the longer the uptrend that you break, the more significant it is. Something breaking a 2-week downtrend or a 4-week uptrend, those are trades. Something breaking a 3-year uptrend is not a trade. It's a rotation into another asset, and those other assets are where I'm at. I feel comfortable doing it. I was calling the oil trade back in July of last year. I agree with Levinson. The dollar is going to strengthen whenever you get volatility in the market. And that's what's, bringing our emerging markets back. I called out the Carew short, the day of. Um, and it's not like I call everything perfect. I don't call everything to the day, but I'm staying away from that. I saw that the Oracle news, Oracle is now refuting what Reuters came out with. I don't know how we can't hold some of these media outlets to their responsibility. This has happened, 3 or 4 times in the last, 4 weeks, where someone gets a hold of a story or just prints a fabricated story and blows people up. I don't know why there isn't, some type of revolt against, some of these media outlets that publish something. Oracle is saying the data center is actually up and going. you know like, did this guy not have feet on the ground? Could he not write a story? But this is what happens. You get people emotional. That's what gets into market corrections, right? And that's where we are right now. There's a lot of emotions going on. High yield is creeping up. The X triple C, which is C-rated bonds, we're almost near the April lows of last year when the market, had its 20+% drop. So you are seeing the low end of the credit quality is absolutely being decimated, and that is starting to creep up into the triple Bs, and that's clear. The question is how far does it go right now? Where I think the spread is 323 basis points against the Bank of America high yield. The other problem we have with private credit, and I know some people in this industry, and they have told me that they are holding, where it was last month, even though there's no good pricing mechanism unless a trade occurs within that particular asset. So whether or not I don't want to call it collusion. I don't want to call it something that I could be mistaken, but unless something trades of that asset class, do they have to mark it down? And I think that's where we are in the cycle. That's what's creating fear. Fear tends to feed upon itself, and usually it's good and bad. It clears out, things that are unknown. And I think there's enough to go around there. I think the market's been pretty clear that if you're going to, issue bonds to build out AI, we're gonna hit you. We're gonna hit you hard. We're gonna give you an uppercut, and that's what you're seeing in a lot of the AI related names. And I think that when you see that type of behavior, issuing more debt when the government can't even get rates down, is a problem. You're just creating more debt to fund this virtuous cycle of building out, and it's going to cost more if rates go up, right? And you see the pricing power that the memory companies have. I've taken you through the scenario, where Gary has talked, if he needs something done and calls someone up and they come up to his beachfront home. Hey, you have money. We're going to charge you 4 times more to cut down the same tree. And if it were, a mile inland. And that's what you see across all of the suppliers in the AI. They can charge what they want because the big companies are just throwing money at this thing and they can't stop now. You don't build an airport and not allow airplanes in, right? You'll never make it. So this is what's taking place, and I'm still tilted on the bearish side, especially what's happening to financials and high yield.
Thank you, Dave.
Yeah.
Appreciate that. This is a very fast moving market. The top to bottom on oil over the last 24 hours is possibly one of the biggest crude oil reversals in history from a percentage basis. Yes, it all happened over a weekend, so things get exacerbated. It's pretty interesting, though, that in a day and age where we have more information in more real time than ever, that the volatility is even greater. You'd think the opposite potentially, but I guess fear is fear. And, you know, if you doom scroll, you'll get really scared and it'll force you to sell everything. Breaking news, NASDAQ announcing that it's collaborating with Kraken to launch tokenized stocks on its exchange. All I can say is big news, huge news. At the end of the day, whether you like it or not, I don't care who you are, you're going to be using tokenized assets. It just is. And it shouldn't matter to you. I mean, it's safer, it's faster, it's cheaper, it's better overall. The code does not break, and the humans break. And so, you know, 24/7 trading is a whole other, you know, kit and caboodle that we will face. I don't think that's generally good for the world, but we're just going to go that way no matter what. Also, but tokenization of every asset in every nook and cranny is great at the end of the day. And we're getting there faster than people know. Despite the war, it seems that the Clarity Act is moving. Whether it gets over a finish line, we will all have to still wait and see. Carlo or Lawyered, either one of you guys, any update on Clarity or anything else in the crypto sphere over the weekend, and then I'll get to Sam. Carlo, Lawyered, either one of you guys.
Yeah, so I think we're starting to see, at least on the yield debate, the truth coming out. Brian Armstrong came out on Fox News, pretty much laid down the gauntlet, something we've been talking about on this show for a long time, that this is a manufactured campaign by the bank lobby to protect their stranglehold on how consumers get yield. And I think it's starting to lose momentum, in my opinion. I am going to remain positive and say that legislators are going to start to buy less into this narrative the banks are pushing. And I think we may see a compromise on stablecoin rewards. Doesn't mean we still don't have other challenges in the bill, including the ethics provision. However, I think broadly speaking, there is a major push going on right now by the White House to get this Clarity Act done. And considering the fact that the White House has made this a priority, I think it will get to a vote. An interesting piece that I put out that I'd love to pin, I wrote a piece discussing an interesting statistic. Blockworks put out a chart noting that there was a significant drop in stablecoin yield in DeFi. You can look at that chart and say that this is bad news for stablecoins, but I actually take the inverse opinion on this, and I think that this is actually good news for stablecoins, because I think what we're seeing is we are seeing a increase in adoption and less of an appetite for taking on risk. But I don't think it changes the fundamental thesis that stablecoins are essentially gaining massive adoption. So I'll put that piece in the nest because I know there's still a lot to cover and we're hoping Anas comes in. But for anyone who wants to read that, I think this is probably more bullish than anything on stablecoins. And I think clarity is going to get done. I hope. Back to you, David.
I'm with you on the hope. Lawyered, anything to add to it?
I mean, I completely agree, and definitely Carlo's the guy who would know better about how this is moving. I mean, just alone knowing that it's a priority for the White House is key. And I think as we move towards more tokenization, whether it's baby steps or big steps or however you want to describe it, it's all moving towards a future where crypto and tokenization is ubiquitous, and in which case Bitcoin is still there and thriving. And so keep that in mind. Are we in the end? Is this as deep as it goes? I can't speak to that, but I think I can speak to a future where you wish you had it.
Yeah, no doubt. We will continue to chronicle the developments. And Carlo, thank you always for keeping us up to date on what's going on up on the hill. Um, need to talk about Sam before I get to you a second. Look, 10-year yield, 30-year yield, high. Mortgage rates, high, higher. Okay. Maybe due to the war, maybe the war ends and all this comes back down really fast. We're getting ready in the United States for the spring home selling season, home buying season. We've got a record amount of homes available for sale. We've also got a record number of homes that are being relisted for a second time with price cuts. Um, and we'll see. I mean, it's unfortunate that it's coinciding with mortgage rates that are not staying below 6%, which is, what people think has to be the threshold for the buying to begin in earnest. But nevertheless, at least part of the equation is there. And maybe this war wraps up fast enough to go ahead and get the 30-year enough below 6% to make this, somewhat successful in terms of this season. But for right now, things are pretty frozen. All we've got is more and more inventory coming online, and even on top of that, price cuts. But we certainly we're at record low transactional activity in the housing market, certainly for previously owned homes. Sam, thanks for joining us up on stage. Happy to hear whatever you got to say.
All right, thanks for having me. So basically, I think I was listening when you were talking about the SaaS market. It's always a topic that kind of fascinates me because I've been in the market for a very long time as an engineer. And I think there's a couple of, I have a question, right? But then I still want to say this. I think there are a lot of misconception when it comes to SaaS. On this X, on Twitter, we have had people saying that SaaS is dead. A lot of people have predicted a lot of things about software as a service system. And at the same time, I think people kind of got it wrong when we use the word SaaS because oftentimes some
Sam,
of these SaaS.
just 1 second, Sam. Do you work for a
Okay.
major SaaS software company? Sam,
Yeah. What was the question?
do you work for a major SaaS software company?
So, where I work currently, I work as a system software engineer, right? And what we do at the studio is we mostly build SaaS. That is our work, and I do most of the designs and most of the architectural part of it, and I do a lot of building as well. So when it comes to SaaS, it's something I'm very well inclined with, you know. And I'm saying this because oftentimes people have a lot of misconception around it by thinking SaaS is just one kind of software that does a crude operations. And if you look at the modern software, right, all the modern software that we have right now, many people don't even know that they are basically a SaaS platforms, right? Talking about Google, talking about Amazon's, because what do I mean by SaaS platform is the fact that they kind of sell they sell software to people in any form at all. So my question regarding that is that based on your predictions and based on some of the conversation I've had, you guys, some of the things you guys have discussed, what do you think? What is your own personal opinion based on SaaS? It doesn't matter whatever it is, I just want to hear from you guys. What is your personal opinion based on the future of SaaS? Do you believe that there will be a time when we are going to have more decline in the SaaS ecosystem? And also, I don't really see some of the agentic, some of the AI that we have right now. I don't see them closing the gap very soon right now. But I think I would just like to hear from you guys because I don't want to talk more about that. But if you guys would like to share your perspective, I think I would just like that.
Sure. I'm going to let Nathan go first, and then hopefully Timothy heard the question, and we could go to Timothy right after that. Go ahead, Nathan.
Yeah, so I was exited from a large SaaS company recently, and so I have some experience there. I've worked on the cybersecurity side of it as the manager, and I will say that I think it's going to change, but probably for reasons that people don't expect. One, I think if anybody's heard of the dead internet theory, I think that's becoming more and more real today than ever with all the AI stuff. And I also think that the more we place restrictions on certain things, like I think California, Colorado, New York, and I believe Texas was looking into this but dropped it, of putting restrictions where people have to put their age in on an operating system just to even run it. And I think the more we move towards that kind of direction, I think people are going to start going outside a lot more. So I think a lot of those platforms are going to start to suffer in the future, especially with all of the, like I said, like the AI stuff that's um, blowing up everybody's feeds, basically.
Thank you, Nathan. Timothy, did you hear the question? I'm curious in your response.
Yeah, I did hear it. I mean, I cannot reiterate it enough, but I mean, I have these architecture conversations with the big firms globally every day. I mean, the only players that are mentioned are the ones that I've mentioned many times before, which are Microsoft, Google, AWS, Databricks, Snowflake. Sometimes Data Robot plays in there. Sometimes Data IQ. These are the ones that are there. And I think we've had this conversation before. Yes, there are new players in the market, and yes, they might even be better at doing things. But a big organization, an institution, will never bet their bets on a startup. You know, they're not going to build their critical infrastructure on an organization that's not been around for more than a year or 2 years. They have to stand the test of time. So for big organizations, institutions, they will always go with household names. We have learned that in a bad way with Data Robot a couple of years ago. I don't know if you guys remember that story, but Data Robot was a company that was also on the come up, quite young, took the AI world by storm as a platform to build AI models on in a machine learning platform, use case basis, expanded into the European market globally, went public, and then fired 50% of their sales force, closed all their offices in Europe. And all these European companies were building the critical infrastructure on technology that didn't have any offices anymore in EMEA. So as much as these technologies are good, they might change the way like small and medium businesses work, and for sure this will compete with the likes of Microsoft, Google, AWS. When you look at the institutions, I don't see it happening. There's not a single company at the moment that can or that even comes up in conversations, if I'm very honest. So that's just the reality.
Yeah, I think that. Oh, the guest of honor is here. Anas, good morning, sir.
Good morning, everyone.
Are you? How are you feeling this morning?
Well, I just want to get my voice back.
I'm sorry.
Um, I don't know if there are any questions, but I just want to mention something about this
No, no, no. Wait, wait,
SDR.
wait. Not. This can't start with an. I just want to mention. You have so much to tell us. Please, Anas, inform. First of all, we haven't heard from you since Friday, so we're talking about a lot of time that a lot of things have happened. Oil markets in the last 24 hours, even 12 hours, have been crazy. So please just go ahead and inform us. We're sorry to exhaust you. You're our most important guest these
Oh,
days.
thank you very much. As you've seen, oil prices exceeded $115 for Brent, and we do have. You can see the spread. The spread is widening between WTI and Brent, and this should be the center of attention in the coming days. Now, we do have a few issues to talk about. One of them is that we have more evidence to show this is not about Iran. And all this talk about the release of oil from the strategic petroleum reserves and how the G7 finance ministers are discussing it, and they are talking about a large amount of release. They are talking about 300 to 400 million barrels, which means that if the US agree to it, the release of Biden is going to look too small relative to the release of Trump, if they can do it technically. But the issue here is this, and I really want people to pay attention to this. Okay, you release massive amount of oil from the SPR. What you are going to do with it? We don't have even enough ships. We don't have enough tankers to move that oil, and it's going to move where? It is very clear this is going to widen the spread between WTI and Brent, and this is going to confirm the idea that the final objective is to have cheap energy in the United States, while energy will be extremely expensive for the competitors, regardless who are they. So we are getting more evidence now that is the case. I would like for those who are here for the first time and they did not hear me before, the biggest issue is not oil and gas. The biggest issue is helium and fertilizers and methanol. These are really the most important items. And if those items are not available, they are very destructive to the Asian economies. China is immune right now in the short run. All others basically are in deep trouble. There will be shortages of food. There will be shortages of fertilizers. There will be shortages of helium for the chip making, etc. I'm not going to. This is not a conspiracy theory, by the way. So even if you believe in the idea that the war is about Iran and its nuclear program, even if you take that alone, there are many benefits to the United States from this war and the blocking of the Hormuz Strait. The Hormuz Strait was not blocked by Iran. The Hormuz Strait was blocked by the United States. End of story. You want to go to the details? I'll be happy to. But the United States is benefiting greatly from blocking the Hormuz Strait. And one of them basically is this issue of AI, the chip making, etc., selling U.S. agricultural products to the rest of the world, killing the industry in Asia. In the medium term, if this is going to continue and drags on, China is going to be the biggest loser, but not in the short term. So if this war ends quickly, then China is not going to be affected much. One of the biggest winners is Putin on several fronts. And when we talk about Putin here, you look at what's been going on. I mean, my God, this is. I got to tell you a story about my grandfather so you can understand what I'm talking about. My father lived long enough to. He was diagnosed with TB. He was told at age 36 that he has 6 months to live. He died at 103 from an accident. And when he turned 100, he decided to write his memoir. And in his memoir, basically, said something kind of like changed my life. He said, aside from the wars, he witnessed 15 civilian killings in his life. And he lived long enough to see every killer being killed. The short run is different from the long run. That's really the biggest lesson here. So if you look at things in the longer time frame, you see things completely different. Now the cycle is turning and Putin is in control. Let me tell you what's going on right now. Now, all of a sudden, the oil that is free to move around the world is not from the Gulf, it's the Russian oil. Why? Because there are no long-term contracts. It's spot market. The gas, the LNG that is moved free around the world is the Russian LNG. Europe is still importing LNG from Russia. They decided to ban it in 2027. Putin being very angry and he was biting his fingers and keeping silent. So what we see now, India basically was trying to nail Putin in a way where, okay, we need really to lower our imports from Russia so we can please Trump. Putin stayed silent. This is the time for Putin for his vengeance. This is the time to get the revenge. So what Putin is doing now is just an unbelievable story that the media is missing. Putin is telling the Europeans, you know what? I'm getting higher prices for my LNG in Asia. because Qatar is not producing it, exporting it, and UAE is not exporting it. So I'm not going to give you my LNG. I'm going to send it to Asia. So where Europe is going to get the gap filled from? There is no one who has extra gas or LNG to give Europe beside Russia. And he's telling them, he's just sticking to them. He said, I'm going to send it to Asia. And then to India, even without him doing anything, the market basically is working its magic to punish India. Trump give them a waiver, although it's really a meaningless waiver anyway. Supposedly give them a waiver, and we should see more oil going to India. But because of the higher prices, and this is a spot market, even the ships that were near the Indian ports are leaving India and going to China and the rest of Asia. Just unbelievable course in economics, just studying this, how this is working and how things are going for the highest bidder. So this one issue. The other issue is the desalination plants in the area. This war might end soon and everything will be fine. Yes, we are going to suffer for a couple of months because clearing all the things that happen will take at least 2 months, as stated in my, for those who follow me, you've seen my Wall Street interview, Wall Street Journal. But the issue here is this. If we go after desal plants, this is another level of war. This is the nuclear war. The nuclear war is not really using nuclear warheads. The nuclear war in the region is the desalination plants. It's going to kill more people than a nuclear bomb. It's going to cause chaos for decades to come. There is no water in the area. And every country in the Middle East involved is living off those desal plants. Whether you talk about Iran, you talk about Kuwait, you talk about UAE, Saudi Arabia, Bahrain, Qatar, or Israel. All of them live of those desal plants. If really we ended up with bad people trying to cause this chaos, whether we don't know what happened, but two things we have to pay attention to here. The first one is a lot of debris falling from the sky because of the interception of the massive number of rockets and drones. So we don't know whether those desal plants were really hit directly or just because we have things falling from the sky. So that's number one. Number two, many groups in the area have an interest in various things, which means that the firing on oil facilities in the area may not be even coming from Iran. It could be anyone. And we have to remember another thing from wars around the world, for whether you talk about the previous Yugoslavia, or you talk about Russia, you talk about Syria, you talk about Sudan, etc. We've seen this all over the world where factories basically either insured and all of a sudden they are being burnt overnight because of an attack of the opposition or someone else, while really the owner of the factory basically burned it at night to get the insurance under the guise of the war that's been going on. We've seen government-owned factories basically being stolen and then burnt overnight to show, well, it's a war and they've been burnt overnight. So when we look at what's happening in the Gulf today, those drones and the attacks are coming from all over the place, and we don't know who is doing it. I'm going to give you two examples so you remember. Who attacked Saudi Aramco in September 2019, and where the attacks came from? And then there was attacks on the pumping stations in the middle of the desert of the pipeline that is going to the west. Who've done that? I can tell you one thing. It wasn't Iran. So we have to be careful with all this news coming in. And I would like to remind you that the first two tankers that been attacked in the Gulf were Iranian tankers. But the media did not tell us that they were carrying or used for Iranian oil. And then they say, oh, look, Iran is attacking tankers in the Gulf and Hormuz Strait will be closed. But it was Iranian tankers. Why the Iranians are attacking their own? And the other issue we have to remember the following. Until Saturday morning, there was not a single attack in the Hormuz Strait. Not a single attack. And the media kept talking, Hormuz Strait, Hormuz Strait, Hormuz Strait. There was not a single attack. And then on Saturday, there was one single attack, and that's it. All the other attacks happened very far away from Hormuz. Back to you.
David Nicoski, you have a question for Anas?
Of course I do. Honestly, I'm playing catch up as I was on vacation. I saw some storage facilities get hit in Iran, and I think from some posts that I read about, you had posted that was production that was mainly used by Iran. It is, I think there's and I assume that's what you had posted. If you take out storage, in other places in Iran, the wellheads don't just pump directly into ships. So if you take storage out, and you can correct me on if I'm wrong there, but you have to have storage facilities, otherwise you have a pretty much an unproducing wellhead, as you don't pump it right from the well into the ship. So is the storage facilities that have been attacked, are those just the ones that Iran uses? And if so, that would mean that if Iran needs oil, they're going to have to take it from the other wellheads that are going into the storage that for export. Is that a correct assumption?
A few things here. First of all, if you look at the history of the oil industry and all the wars that took place, especially World War II, the storage facilities and the ships that transport the oil were among the main targets in the war. I remember the statement that the Allies won the World War II because they floated on a sea of oil, while the other side basically was suffering because they lost most of their storage and they lost all the ships basically that was going to deliver oil to them, to the extent that the Germans invented the technology where we get the liquids out of coal. And there is a very important story in history, and I really recommend everyone to try to search for it and find it, because it is a very important history. The Germans during World War II developed the most advanced plane on Earth at that time. And experts agree that if this plane were to fly, of course, we are not talking about one, but we are talking about a large number of them, the United States would be speaking German. But what happened is, the first plane they want to fly it on the runway, they had to use horses to pull it so they can save on fuel. This is a true story. So yes, you have the most advanced plane in the world, but you don't have fuel for it. Those Japanese kamikaze attacks that been happening during World War II. Why? Because there was no fuel, not enough fuel. So the guy would have, the pilot would die on the way no matter what. So that's why we ended up with the kamikaze attacks. So the idea basically is an old idea that you hit storage facilities and then the army will not have enough supplies, and then the public will get angry and probably they will go to the street or something. That's the thinking. But Iran is a very massive country, and the oil wells and the oil fields are way far away where the Gulf is and near the Iraqi borders, while the population centers in Iran are exactly on the opposite side. So those are near Tehran. In terms of the drama of the pictures, we have to remember that any storage facility anywhere in the world, if it catches fire and it has fuel in it, is going to give you that dramatic view of massive fire, 300 feet, probably more than that, smoke in the air, etc. You end up with really this drama all the time. That's why we see the terrorists and militias and all the opposition groups, etc., in the oil-producing countries. They target those simply because of that big bang effect in the media, because people will be taking pictures from very far away, miles away, etc. Hundreds of thousands of people will be taking those pictures and spreading them, and then it shows like whoever done it, like they are successful in this. So this been known tactic for a very long time. In case of what happened this weekend in this, it was really the most dramatic because you have the city, you have the storage facility, and then you have a mountain behind it. What that means is when you do it at night, the lighting, the way it happens, basically, and the smoke and everything else give you the most dramatic picture of what's happening. But this is the norm for storage facilities when you have fires like this. These things do not change regimes, do not lead to things, etc. And if they are next to population centers, usually in most countries around the world, the oil facilities, including in the United States, by the way, the army oil facilities belong to the army in safe away places far away from population centers where the army bases are. These were in the population center. Mostly it was oil or fuel oil, crude oil or fuel oil that will be refined in the refinery that next to it. And that's most likely what the case is. But the drama was in the picture. If you look at all, because I followed this over the weekend, everyone who is talking about $200 oil, who put his money basically or bought some options or whatever, everyone was making a bigger story on this than you can count them basically. I'm not going to name names, but you can count them saying, oh, Israel is after the energy infrastructure and the regime is going to fall tomorrow. And that's not the case. Just 3 storage facilities. That's it. Not even facility, tanks. And that's it. But the army and the Iranian Revolutionary Guard, they operate in the Gulf. And the Gulf is hundreds of miles away from Tehran. So they have their own facilities, oil facilities way from that. The final one is, and I'm sorry I'm taking a long time here. If you go back to Kuwait and what Saddam Hussein did in Kuwait, the only way to bomb the fields was not from the air and not attacking the storage facilities. The Iraqi soldiers literally went to the wellhead, opened it, and put the explosives inside the well. So all those dramatic pictures we've seen in Kuwait did not happen from the air, did not happen from far away. Literally, every single well that was set on fire was set up this way. They cut the Christmas tree, and they literally set it afire. Or if there is not enough pressure for the oil to go up, they put the explosives inside the well. Otherwise, there is whatever people think might happen from the air is not going to happen. Back to you.
Thank you, Anas. Timothy, you have a question for Anas?
I have a question for David Nicoski, which ties a little bit into what Anas has said, if I can.
Of course.
All right, beautiful. So, David, welcome back. I had a curious question for you because obviously a lot has happened in the Hormuz Strait. I was actually on a space this morning, my time. I don't know what time it was for you, Anas, but maybe it was your evening. You were doing a space on oil as well, and you said something there, which we've been talking about as well last week, which is that the Hormuz Strait, the oil problem will mainly affect the emerging markets, especially in Asia. Now, David, you've been on the space a couple of times where you've been quite bullish on the emerging markets from an investment point of view. And last week we also had Dave Levinson, who actually had a very contrary point of view compared to yours. So I was wondering if, first of all, if you're still as bullish on the emerging markets as you were before, and second of all, if there is really a capital flight from the emerging markets, if that's already seeable in the data, as you tend to follow that.
Yeah, I was very bullish on emerging markets in December of 24. I've changed my tune. I posted some of the comments about Druckenmiller, going into Brazil now, and I said, you missed that. You're late, right? And he's buying financials. And I said that I don't like that trade either. In times like this, the dollar is going to absolutely go vertical. So no, I have pulled back dramatically from the emerging markets. I mentioned that I shorted Peru at the top, the day of the top. Like, when you get runaway, moves like that, and you saw that candle, which was, not a very good looking candle from a technical perspective. I pulled back dramatically. The places that I do want in the emerging markets are the ones that are commodity rich, and I'm going to scale into them. So I'm coming back. I actually bought Brazil on Friday. A little bit. Like I'm not making that the call that that's the bottom. And Australia, I also did that. If you look at, everything I see in the charts is exactly what I saw in 2002 in the commodity structure. Aluminum's breaking out to, multi-year highs right now, and it's clearly outperforming the S&P. You look at, the soft grains, corn's making a bottom. What is the largest input into corn? It's fertilizer. What do we have a problem with? Fertilizer. You're going to get less crop planting. And what does ethanol go into? Gasoline. So you're seeing almost in my eyes, and we made this call in fourth quarter of 2002 that energy would lead the next decade. Guess what led? The S&P went sideways. Everyone would say tell you that we were in a sideways market. Brazil from 2002 to 2009 was up 600%. What was the S&P? I think we're going into that type of market. If you run any hard asset against financials, it's crumbling. I mean, the financials are not are not doing well. So I do like the emerging markets in the commodity side is where I expect that I will be taking positions as we move along the time horizons. I don't want to make that call on this show that, oh, today was the bottom in Brazil, right? Because bottoms take a while to form themselves. I think it's already made a major bottom. I think we're looking for the pullback to come back into a support area. You've already had Trump taco on Russia, right? On their crude. My expectations is he's going to do everything to tamper down any inflationary forces, and one of those is going to be Brazil. That's my take on it. If you did it to Russia, which is a larger enemy than Brazil, I don't see why you won't taco on Brazil. That's my take on it. And Australia, it's made a bottom. It's been outperforming, but that only recently started outperforming. They do a lot of trade with Russia as well. I think they supply 22% of China's coal. So those are the areas I'm looking at. Coal prices are ripping. It's going to cost a lot more to get commodities from the ground as energy and diesel move up. That's one of the largest input costs to gold and silver. They don't like the higher rates, even though they tend to perform well in inflationary periods. But I think that's going to bring down some of the earnings power of some of these companies, so they get a pullback until we start to see some stabilization in energy prices, with which we can move forward to, I think, higher levels there. I heard I put a chart out, and I think it was July, August of last year, and everyone's saying gold is done. I put up my group chart. I calculate my own groups and cover 44 markets around the world. And if you looked at that chart, and I think I posted it end of July, if you think this is the top in gold, we're just breaking out of a 16-year base. I think we know how that turned out. Again, doing technicals on one chart is not what I do. I do it on thousands of charts and play probabilities. It's a 5,000 piece puzzle, and actually I cover almost 20,000 stocks in total globally. So it's finding something that's different than what the rest of the technicians look at, in my opinion, to find where you have higher probability of success. And I think that is, you've never had a period where commodities like gold and silver only outperform for 2 years versus the index. It doesn't exist. Usually it's anywhere from a 5 to 7, 5 to 8 year run. So if we're in year 2.5, I expect those to continue to do well, but it doesn't mean they'll do well in the next 2 months, right? It's about finding the pullbacks to support levels and to build a base again and resustain its move. So I hope that answered the question. I'll be looking for the commodity driven countries over, the tech driven companies. I think the other shoe that could happen here is we've gone into Venezuela, we've gone into Iran, two of the allies of Russia and China. My biggest concern here would be that China halts, the exports of rare metals. That would put technology and defensive companies, everything from bullets to every product that goes into a semi chip. If that happens, and you're already seeing China is pulling back on their rare metals to Japan, who makes a lot of electronic products, by the way. So this is a way. If Trump's goal is to cut China off from energy, how are they going to retaliate? And that would be my expectation. Am I going to be right? I don't know, but that's what I'm looking at. That's where I'm going forward.
Excellent.
Back to you.
Thank you, Dave. Eric, I see Sam's hand is up. I'm going to have to drop. So I'll give you the show to go ahead and close, and certainly anything you want to add to the subject, please.
All right. Thank you very much, David. Sam, go ahead, and then I'm going to close with a few comments.
All right. Thank you, man. So basically, I kind of agree with what Anna's Alhajji said regarding oil. And I think mineral resources and something like oil is becoming a thing now. And in my own take, I feel like the world power, they're kind of preparing for war. And even though it might not happen now, I believe it's going to happen. And I'm saying this because I'm a Nigerian, right? I don't know if you guys read the news when President Trump said he wanted to invade Nigeria. And to be honest, it's supposed to be an invasion, right? Even though it turns out to be a collaboration. And I have this conversation with some people, and I say that if Venezuela doesn't happen, definitely Nigeria will have been invaded. And I tell you that oil is something that most of the big power, I mean, when it comes to some of the artillery, some of the machines that they use, it's need oil, it need a lot of energy, and to get a lot of it from oil, you know. And that is why I kind of agree with what Anna's actually said regarding oil. And I think we might not have the war now, but in the long run, I know the war is still going to happen. But what we just have now is just the tip of an iceberg. That's just my take on that.
Thank you, Sam. I just want to know the audience that tomorrow Velina Chakarova will join us to talk about the economic repercussions of the war, to add to what we said today from a geopolitical perspective. And so thank you all for coming as usual. It's a very active week, and I expect another very active week this week. Let's see how this all turns out. David Nicoski, welcome back. Good to have you back.
Thank you.
And see you guys all tomorrow for the next show. It'll be on, again under the Mario handle, I think, tomorrow if there's no major event. Okay, have a good day, everyone.